After reporting its Q2 2021 results and once again gaining investors' attention, it looks like SoFi's management team isn't ready to leave the spotlight just yet. As recent reports show, Anthony Noto, SoFi CEO, recently bought 3 sets of 7,150 shares after SoFi stock price further dipped this month of August. I don't know about you guys, but when the CEO or management team buys more shares, especially after many people are shorting the stock, it makes me feel a lot better about my investment in the company. In this video, we will be going over SoFi's management team's support of its own stock and what their recent SoFi stock purchase means for other SoFi investors like us. If you want more content like this, hit that like and subscribe button for more weekly videos. It takes a good amount of time making these videos and we really appreciate the support. Please note that we are not financial advisors and this is not financial advice, so we strongly suggest you do your own due diligence. Anyways, let's get right into it. Before we head on to our main topic, let us first define insider trading. Just so everybody's on the same page, insider trading generally has a negative connotation that is based on the perception that it is unfair to the average investor.
It's unfair.
Insider trading involves trading in a public company stock with non-public essential information about the stock. It could be either legal or illegal. Basically, it is considered legal when company insiders who are engaging in trading the stock report these trades to the SEC in a timely manner. Now, why would management buy their own stock? Peter Lynch, considered to be one of the greatest investors of all time, known for bringing Fidelity's fund from $100 million to $13 billion, once said, "Insiders might sell their shares for any number of reasons, but they buy them for only one. They think that the price will rise." SoFi CEO Anthony Noto went on a little shopping spree, gathering over 21,000 shares of SoFi, amounting to over $300,000. It's not a good look when 1 or 2 insiders knowingly sell shares at a time of a buying opportunity. But at this point, it's not only Anthony who's buying the dip. Officers and other insiders are getting the most out of this stock price decline as well. And if you still haven't gotten the point, perhaps we should bring back into the life the history of Tesla, featuring the techno king himself, Elon Musk. Many think innovation is yet to come, and this is why disruptors are always in the hot seat. Elon is no different from those who are victims of the short sellers who are way too pessimistic of this company's stock. In 2013, he bought over 1 million shares for $100 million despite the existing holdings he had. And believe it or not, he was the only insider who believed in Tesla to death. He even borrowed from Goldman Sachs for this one. Overvalued?
Not.
Elon continued his streak of buying dips in 2019 and 2020. Prices had another drop, and he really put his life on the line as he bought another 8 figures worth of shares just before the share price skyrocketed and headlines got inflated with the surge after the endless dips. Anthony Noto and his team expect continued strong growth in the third quarter of 2021, reiterating again and again its expected adjusted net revenue of $980 million and adjusted EBITDA of $27 million for 2021. As Warren Buffett would always say, never invest in a business you don't know. Well, if there's anyone in the world that knows SoFi the most and its pathway to the future, I'd bet it'd be the great mind behind its one-of-a-kind business. Keep in mind that Anthony Noto has experience in banking, working with Goldman Sachs, and was the chief financial officer of Twitter and the NFL. Digital financial platforms are growing like wildfire. Financial analysts even predicted that SoFi will reach $2 billion in revenue and break in profitability in 2023. SoFi's book of value as of June 2021 is $4.5 billion and its market cap is around $11.8 billion as of recording this, significantly showing that SoFi has a great potential of generating more earnings. Amid its stock price dip, investors believe that SoFi has the capability of excellent growth, expansion, and increased profit. SoFi's insiders hold more than a quarter of its overall shares and are seeing this dip as a great buying opportunity. That's Anthony Noto's SoFi CEO himself, and also Chris Lapointe, SoFi's chief financial officer. According to CNN business forecast, SoFi's stock price could go as high as $30 in the next 12 months. This could definitely mean doubling your money in a year if you invest in its stock, which is valued between $13 to $15 depending on the day. Their management's vision of making SoFi a one-stop shop is slowly turning into a reality. Once a SoFi member, always a SoFi member. Once you enter the platform, you're definitely going to keep wanting to indulge yourself in using their other products especially if the ones they're offering are the things that you need as you grow. This is what makes this company more valuable. In conclusion, the big brains behind SoFi definitely know where SoFi is heading, with its members increasing day by day and fintech companies' role in the financial arena getting bigger with time. There's no doubt SoFi, with its management's proper execution, will reach greater heights. And no, we are not saying these things could happen in a glimpse of an eye. Great things take time and are definitely worth the wait. And we are definitely here watching SoFi slowly claim its rightful place. 2 to 3 years of waiting isn't going to hurt that much. That about wraps up today's video, guys. Let us know in the comment section below your thoughts on SoFi's current valuation. Is it overvalued, undervalued, or just right? Until next time, peace.